But in the next year or so, as we see that supply-demand gap tighten and possibly crossing over into a deficit, we think that this is an ideal time for us. It's all about timing for us.
Prospect Resources is a lithium company based in Perth with operations in Zimbabwe, and it owns the Arcadia Lithium Project in Zimbabwe, which is the 7th largest hard rock lithium asset globally. This fully permitted project already has a detailed definitive feasibility study and offtake agreements, securing up to 72% of the lithium produced over the first 7 years of its life. Joining me to discuss more is Managing Director Sam Hosack. Sam, welcome to TCN TV.
Thank you for having me here today.
The resource potential and mine life of Prospect Resources' Zimbabwe-based Arcadia project is impressive. What are the key mineral resource or reserve and mine life metrics attached to the company's Arcadia Lithium Project, and is there scope for upside revisions here?
Look, good question, and thank you very much. That's a great way to provide a bit of an overview of the Arcadia project. It is under reserve, and there's 37.4 million tons under the reserve. It's grading 1.22 Li2O lithium oxide, so it's currently around the 7th largest hard rock asset. So it's in the sort of world-class or global space and very competitive in that sense. At least 30% of the ore reserve is in the proven category, so that gives you a huge amount of confidence as to the level of definition, geological definition that's been arrived at. And certainly throughout the journey of the 15-odd year life of mine, there's going to be possibilities to increase that. And not least, one of those will be technical development and increases in recovery. So yes, we very much expect to improve on that reserve. We do think that we can keep building it out, and I think the key opportunities for us are to increase recoveries, particularly for petalite, which is one of our minerals.
Certainly. Now, Prospect Resources management also often talk up the cost advantage enjoyed by the Arcadia project relative to rival mines. Where does Arcadia sit on the spodumene hard rock total cost curve, and what underpins these low-cost assumptions?
Sure. Look, this is a key point for any emerging development story, and really, our technical focus has been deriving key competitive advantages to enable us to be in the most competitive quartile. And so I can talk very quickly about those. So operating costs, largely a function of strip ratio and geometallurgical ability. The operating cost is really in the lowest quartile against our spodumene peers. But we are different from them in the sense that we have spodumene and petalite. Spodumene, of course, is preferred in the EV and battery minerals conversion process. We call that the chemical space. And in the technical market, petalite is really a highly preferred and sought after product. It's slightly lower in its Li2O, it's a 4% product, but its value in use on the basis of its high impurities, or very low impurities, high purity, has shown that it sells at a premium over its superior spodumene peer. So when we look at the spodumene cost curve, we're already very competitive in the bottom quartile. But if you take petalite and tantalum as credits to the spodumene cost curve, it puts us very much at the bottom of the cost curve.
Now, Arcadia's pilot plant is expected to launch in the first half of calendar 2021 with single train, then dual train plants to fire up in the following 2 years. What production is expected to be delivered at each of these stages, and is there upside to these numbers?
Oh, absolutely. We think this is the strongest narrative to underpin a pathway to production. So firstly, the pilot plant operation is primarily to validate the new discoveries and recovery that we've been announcing throughout this year. We want to lock those in via a large-scale operation, at least bigger than a lab scale. So a pilot plant really enables that. It provides us products that we can then supply to our customers and allow us to then go through the qualification gates. And that's really an imperative if you look at a pathway to production and being able to ramp up to production. As we move forward towards the middle of next year, we should complete the front-end engineering design, which it underpins the initial stage, the first train. Now, we think that's going to be in the order of 0.6 million tons per annum. And of course, the view is that the funding hurdle is going to be very achievable. And we'd like to make that financial investment decision in the latter half of next year, with a view to be in production the year after.
Prospect Resources expects its Arcadia asset to deliver average annual EBITDA of $168 million in its first 5 years. What are the key assumptions underlying this projection?
Good question. So fundamental to them are the first 5 years of ore presented to the mine, which happened to be quite high in petalite. In the first 5 years, we also expect the EV demand supply curve to really tighten. We expect that, and I think there's consensus around that happening towards the end of this year or next year, in the next 12 months, either way. So it's around pricing, it's around that tightening of supply and demand in the chemical market. And for us, a strong supply into the European glass ceramics market. So we've got an offtake with Zimbabwe for the glass ceramics product. And those two real key assumptions are underpinning the strong performance in the first 5 years. So there's certainly upside to that. We're looking to improve recoveries and enhance the economics. So you would be focusing on those upside points.
Okay, looking more closely at your offtake agreements, while up to 72% of Arcadia's production is already under offtake for the first 7 years of its operation, Uranium One is now undertaking due diligence on PSC and its Arcadia mine. What could flow on from Uranium One's due diligence process, and what would it mean for those groups with existing offtake agreements?
Well, what we do know, and what's in the public domain, is that Uranium One are strategically focused on African assets and world-class assets, and we're under an MOU with them. We understand too that Russia doesn't have substantial lithium reserves, and Rosatom and Uranium One Group have the clean energy minerals mandate to source and supply sufficient lithium for their supply chain. So that's the backdrop. As to our readiness, we're fully permitted. We believe we've got a very clean product, a class asset, and we're near production. So those are the key attractions. As to the quantity of offtake that Uranium One require, as they reconcile the balance of the offtake, we believe they're going to need to take a stronger position in Prospect to secure a greater portion of that offtake. And so I think it's that healthy tension that we're expecting in a tightening lithium supply-demand market. So we can see that happening in front of us, and we expect that to have a healthy impact on our economics.
Okay, now the Arcadia plant is still more than 2 years away from being dual train. At what point will it be producing 100% of current offtake agreements?
A very difficult question to answer, and one that we've been working hard at for a year at least. We would expect it to be within 18 months or 24 months of where we are now. But we, the bigger backdrop and the stronger question is, where is the market going to be? And our view is that the market just hasn't been there in the last year, making our investment decisions far more protracted and complicated. But in the next year or so, as we see that supply-demand gap tighten and possibly crossing over into a deficit, We think that this is an ideal time for us. So it's all about timing for us. We want to be ready. We want to have those, shall we say, stage approach via multiple trains. And, that's really a solution to ensure that we are ready. So the real key will be to see the tightening of the market.
Well, thank you so much for your insights today, and all the best for your future progress.
Thank you for having me today.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV, and drop us a comment. Tell us who you would like to see and what you would like me to ask them. Or if you're an investor, please send us an email so we can keep you in the loop with the latest ideas to empower.